Hi, it's Steve and Joe from Freshagenda. And Steve, this week we've got a very brief update about global markets.
And you glossed over the fact that we're in our new recording room, our new meeting room, which we've just installed a table in, so now we can use it.
Yeah, I'm sure that's really interesting for everyone. And then we're going to be talking about the latest global trade update and a little bit about Oatly.
Yeah, just a little snippet. So we're putting together our monthly outlook update, and we usually do something like this: is what's new, what's changed, what's dynamic out there. We struggled this time, but not a lot has changed, and some of these things have been there for a little while. So the weather lingers cooler in Europe, with a fair bit of rainfall. That's apparently making things a bit, in the west of Europe, making things a bit harder. Feed prices, they've come off a bit, both European and more so I think in the US. That might ease the pressure on
margins,
producers. Yeah. US milk flow is pretty strong. There was plenty of surprises in the production numbers that came out, and we'll talk about that. I think you got that later.
Yeah, it's coming up later.
And there's a bit of a surge in New Zealand as well, which does that translate into next season? So we've got lots of thoughts about that in our work, about the connection between a late season finish and the next spring. A little on the demand side, though, I think in terms of trade data, recently we've seen some slowdown in some of the more price-sensitive regions, and that may become more pronounced.
Yeah, just as those prices get a bit higher and affordability gets a bit challenging for some markets. So what about trade? Because this data was quite interesting and on its face would seem quite encouraging.
Very strong month change in March, but last year was fairly weak. So 2020 was, subdued, and therefore you've really got to start looking at longer periods to see is this, what's underneath this. But yeah, world trade was, it was up 13%, quite an astonishing number. But when you start to look back at other periods, it's not so great. We
do always see this seasonal lift in March when you look back at those couple of years. And what happened in 2020 was it just flattened. It didn't peak quite as much, did it?
That's right. Yeah, there's a big gap.
It's quite a different pattern in 2020. So yeah, where all the comparatives from here on in are a little bit different.
We've looked back at 2019 and it's actually down on 2019, the same period, even the 3-month and the 6-month period. So I think that's a good measure. But across the commodities, naturally all up, with some exceptions. Infant formula is still quite weak. But, when you see the fats rising, you go, oh, what? Yeah. But they've been struggling for some time. In this data, the dominance of China stood out, and even when you dig a little bit, South America's only in the positive territory there because of Brazil having a bit of an import gap still. But yeah, China heading away, and when we go across the commodities, it got quite boring adding this up because there's China's growth, and it's across
China.
Powder. Yeah, powders and fats and cheese. It's quite astonishing. It's both the milk gap in China and the pull for the fresh market use of milk, plus the refiring of eating out and those things is really kicking in. So it's bringing in more butterfat, bringing in more cheese. So it's an across the board effect with different things causing it. And that's that China data. Infant formula is still markedly down with local brands driving higher share. But when we look at the commodities, what's important to reflect here is that prices are moving up quite firmly, and this data is basically business written in late 2020 or even very early 21.
Yes. When
prices were well down compared to where they are. And when you look in at whole milk, New Zealand prices have gone $1,000 higher than this since
subsequent. Yeah.
So those bars will start to head down. I think China will probably come off a little bit, but certainly other regions will.
Yeah. There's still that, the thing we watch, that import gap between local production costs. So that will be the key to that slowdown.
And they're still positive. Yeah. With Butterfat, Butterfat trade has been a very steady slide. A lot of things causing that. It's not only the developing world slowing down, but it's also the US markets taking in less butterfat. The trade between UK and Europe is well off, and that there's many things in that as to why that's falling. But again, recent prices are significantly higher than what we're seeing there. Again, another $1,000 difference.
Yeah.
Which will show up in coming months. We've had a late update. The data that came in this morning from New Zealand's exports, which were generally not so good, except for China.
Yeah.
Have you heard this before?
Yeah, it's a one-trick pony at the moment, isn't it?
Yeah, so across the board up for China with, I think one exception, it might have been butter, but across New Zealand's exports, they were weaker in general. So it's starting to show that these higher prices are seeing other regions retreat.
Yeah, so it's likely that we'll see that slowing coming through in the months ahead.
So big news in the corporate sector was the successful capital raising by Oatly, which went to the market in the US and got valued at $12 billion on their float.
Incredible.
Which for a business that's got sales of 400 million US, that's quite an astounding feat. But this is essentially a tech stock. There's a brand which has got promise, and you always see these things. I remember back in the day when A2 first surfaced, we had a similar sort of effect, I think. Didn't do this sort of big splash launch, but certainly the Better For You brand echoes are there.
Yeah, and it's global. It's very much global.
Yeah.
So it's a huge valuation, but you've just put it against sales there, against some major other dairy companies, and it is astonishing how the market's actually valued the company, isn't it?
Yeah, so if I put that into a ratio, the market cap to the sales, it stands out, and like everything else is quite small. And I've dug back to what A2 was achieving last July. A2 shares are now about a third of what they were, less than a third of what they were back then. But even in July, A2 was when it probably peaked. It was 8.5 times sales, and Oatly is above 40. So I then went across and looked at relative the comparison to other big tech bubble stocks, and it's still pretty good.
It's amazing.
We've got all the high
Whoever's done this IPO,
well, it's fantastic brand positioning, and every time there's an article about this, it mentions Oprah and who else is involved. I mean, I'll probably get them wrong, but there's a number of celebs that back this, or some rappers and all that. That helps. But even, like Tesla, Uber, all the bigs are there, and still one above that. So let's see how long that endures.
Yeah, one to watch.
Lastly, chart of the week.
Yeah, this is something we referenced earlier in our market update, and this is data, Steve, that has surprised the market a bit, how strong April milk production was out of the US, bearing in mind that it was against April last year when we saw a fair few cows exit, as the pandemic issues were arising, but there's still growth, even leaving aside that factor.
Yeah, the year-on-year change in cow numbers was 113,000. It's a big number, which is about the capacity of a new plant that's been added in Michigan, roughly. But last year's cows dipped, as you said. This year's went up, and I think there's the rising in numbers, which probably surprised a bit.
Yeah.
Which when you look at the yield gains underneath that as well, which were quite impressive. They're the blue bars. It's the highest year-on-year growth we've seen there for a while. But the cow number growth, it takes a while before that works out of the system now. So I think what the market's recoiled at is we're going to see these positive numbers for a fair while yet.
Yeah. At
least into Q3, probably into Q4. So that just means more milk, more cheese coming through, and the cheese market has crashed as a result. In spot terms anyway. But all right, it's a good wrap.
Yeah.
Thanks for watching. We'll be back soon. Thank you.